is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of DeFi Decoded. I am Alex Tapscott, here with Andrew Young. Andrew, there's a real smattering of things to discuss today. Last week was consensus in Toronto. I think over 6,000 people descended on the city from all over the world. The weather was nice, the vibes were terrific, and I, for one, was really happy as a Torontonian and as a Canadian to showcase the city and also to highlight some of the important and really exciting stuff that's happening in the Web3 ecosystem. And also to share a little bit with people who maybe aren't as familiar, the outsized and important role that Toronto and Canada has played in the development of Web3 and platforms like Ethereum. We also want to talk about what's going on in the US on the legislation front. There was a key bill, the Genius Bill, passed a procedural vote in the Senate. We're going to talk about that. It wasn't the passage of the law, just to be clear, but an important step nonetheless in the direction towards greater regulatory clarity. And also want to talk about everything that's going on in the world of Bitcoin. There's been a lot of new capital formation around Bitcoin. I believe that the ETFs just crossed $40 billion of net inflows. The public markets are also seeing some really interesting opportunities on the corporate side. So we're going to get into all that. But first, Andrew, let's talk about the market. People are calling this the most hated rally. I would say it's probably the most ignored rally of all time. I don't remember another moment when Bitcoin was within striking distance of an all-time high. And I don't know, look, there's some chatter online and people are excited, but this has none of the same kind of fervor that we've seen in the past. What do you make of what's going on in the market today?
Yeah, I think, honestly, I think the biggest aspect of that is the fact that Bitcoin dominance ratio is just so high, right? So like this rally, there has never been more coins that essentially have ever existed. Like coin-to-coin,
like more variety of coins, right?
Yeah, exactly. Yeah. Like CoinGecko only captures, I don't know, maybe one of every 10,000 coins that's created.
Right.
And they have currently 16,000. Like they have essentially the top 20,000 coins. And they're tracking 20,000, which is a huge amount. Given that, really, there's only like 2,000, maybe even like 1,000 that are actually real. So we've never seen such a huge, essentially just variety of coins, and yet so much capital is really just going to one asset, which is Bitcoin. Bitcoin dominance, which essentially is like the market cap of Bitcoin compared to the total crypto market cap. It's for like the first couple of years up until 2017, it typically was sort of hovering in the 85 to 95% ratio. There was a couple other assets. And then 2017 was kind of like the first, bull market where Bitcoin dominance actually fell quite a bit. Fell from essentially at the start of 2017 from like 85% all the way down to 32% by the end of 2017.
Yes.
I consider myself a 2017 vintage crypto person. Like that's kind of when that was the bull market that kind of got me full time in the space. And it was really common back then to be like, Bitcoin dominance is going to trend towards maybe not zero, but trend closer and closer to 0% over time. And that was very common.
And what was the thinking behind that?
Well, it was just like we were seeing a proliferation of new assets that were gaining market share. There was Bitcoin Cash, which was the fork of Bitcoin, Ethereum. That was also when Ripple went crazy. Stellar was really big, Cardano. There was the ICO boom, right, where there was like thousands of new tokens created, and all of that was happening on Ethereum. And so, that was kind of the message there. And then what's interesting is Bitcoin dominance only fell. Sorry, I do have kind of like sort of a narrative around this, but Bitcoin dominance only actually really fell in the essentially the last 6 to 12 months of this bull market. That's when it really started to sort of crater. And what's interesting is that then during the bear market, it climbed back up to like roughly 65, 70%, and actually stayed there throughout the start of the 2021 bull market. Only in the last 6 to 12 months did Bitcoin dominance actually fall. And when that happened, it went from essentially 70% at the start of 2021 down to, again, sort of mid 30%. And once again, 2-3 years of bear market, and as well as like the first half of this bull market, Bitcoin dominance has just been in an uptrend consistently. This time, like right now, Bitcoin dominance is up to, I think it hit 62%, 61%. So again, it's slightly lower peak than the last two bull markets, but again, just continually goes up. I would say most people now in crypto, if they haven't sort of, I don't want to say capitulated, but most people are very, very high conviction Bitcoin and relatively mixed to low conviction on alts. And again, we just haven't seen that sort of pickup in alts. But this time it's even crazier because there's just so many coins, right? It wasn't like 2017 when maybe there was like 100 or 200 coins that were somewhat investable. Or I wouldn't say investable, but had liquidity that you could invest in. Last bull market was like a couple thousand. This market, it's like tens of thousands. It's completely insane. And again, Bitcoin dominance is still at that sort of 60+% range. And so I think what's happened, sort of to bring this all full circle, I think what's happened is actually quite common it's happened in the last two bull markets, but it still doesn't, it's just to an even bigger degree, which is, I think people are just, this bull market is very quiet because so many people are very underweight Bitcoin. Like I would say the average person who's full-time in crypto does not have 60% of their portfolio in Bitcoin. Typically it's like, I was looking at different surveys of people, people who spend all their time in crypto full-time, and it's pretty rare that you see people with like 70, 80% plus Bitcoin, unless they're like building in the Bitcoin ecosystem directly. Most people are kind of spread across multiple different assets.
That's pretty interesting.
Yeah. And so the people who are usually 100% crypto or 100% Bitcoin are actually typically the institutional investors, because, they put 1% of their assets into crypto and they're like, okay, I'll just put all of it into Bitcoin and I'll just buy the Bitcoin ETF.
All of their allocation to crypto, you mean?
Yeah,
sorry. I'm not going
to allocation to crypto.
They're not going to buy a bunch of different things or do different strategies. It's like, if I'm going to have any of this, I'm going to own some Bitcoin and that's it.
Exactly. So, and then another thing too, and we were talking about this on the last pod. It seems like a lot of the new money in this cycle is actually going to the TradFi markets, into these like Bitcoin treasury companies, right? So a lot of this
I think most of it is going into the ETF still, like on a total gross basis, and MicroStrategy second. But yes, there's definitely a lot going into these Bitcoin holding companies. Let me build off of what you're saying. So it's not that there's not a loud chorus of people cheering on this bull market in crypto. It's that most of the accumulation that's happening in Bitcoin is happening in either like the Bitcoin native world or in the traditional financial world. And that's why you see search results, for example, for buy Bitcoin, actually flatlining at the moment, because people are finding other ways to get exposure to that through ETFs and treasury holding companies, and maybe a direct investment through like their brokerage. So we saw news that JP Morgan, for example, this week is going to permit clients to invest into Bitcoin, basically as a matter of market access principle. Jamie Dimon isn't suddenly a fan. He said, I don't think people should smoke, but I'm not going to, stop them from smoking. It's a free country, that kind of attitude. So pretty weak endorsement, but still, like, that to me was a really interesting signal. And then to me, like, this idea that crypto natives are underweight Bitcoin, and that's why maybe people don't feel as bullish, I actually think is like a really interesting insight that I'm not sure I fully appreciated. Because like everyone's got some Bitcoin, but a lot of other people have been working on something like building a project or, building inside of an ecosystem, like whether it's Ethereum or Solana or some of these other ones, for a long time. And Bitcoin, it may be that people even of our vintage owns some Bitcoin or have Bitcoin exposure as a matter of principal diversification. Maybe it's an early holding, whatever. But if you like came into crypto in like 2021 or something, would your natural reaction or instinct be to like go into Bitcoin? Maybe not, right? So I think that is sort of an interesting insight, which I don't think I fully appreciated. I wonder what it takes to change the perception of this market, because I always thought 100K was going to be a big psychological trigger. And right now it looks like we're kind of just testing that high. Like, we're above 100, obviously, but the high, I think, from Jan Feb was like 108 and now it's 105. So we're right within striking distance. Like could be a double top, and then we see another pullback here before breaking out, or maybe we don't break out, or maybe, we shoot right through this. Like I really don't know, but I have a feeling that breaking through the all-time high is going to start to get people's attention. What do you think?
Yeah, no, I totally agree. I mean, and also just one other thing on the Bitcoin aspect. A lot of people, a lot of people don't realize you can buy like fractions of a Bitcoin. Like that's actually quite common.
It's crazy.
When I talk to people who are new to crypto, but then also
it's like Berkshire Hathaway stock, right? It's like I can't even, one of these things costs $500,000. It's like, well, you can buy fractional shares now. But like you've always been able to buy fractions of Bitcoin.
Yeah, exactly. I think Berkshire has a Class B shares, right?
Yeah, they have a different class now. Yeah. But that's a recent phenomenon.
Yeah. So in crypto, we call this unit bias. Essentially, this idea that people don't, or like this thing that people don't realize, which is like people really like to own 1 million of something versus like,
I know, but the unit bias doesn't seem to be working in your favor, in your argument's favor, because the thing that is the highest unit value is the thing that is doing the best compared to the ones that are cheap, i.e. have like a small unit value of like a few cents or dollars, right?
Oh, no. So I'm saying that it's unit bias. If you think about it the other way, unit bias sort of systematically overvalues smaller coins, right? So you actually will get worse performance. Like you get alpha by going against the trend, right? And most retail do not want to buy 0.01 Bitcoin, right? So in a way that almost that works against Bitcoin. It makes it harder to want to buy it, to be honest with you, because when I talk to new people in the space, they're like, I don't know, Bitcoin, 100,000, like I could buy like 0.01 of that. Whereas I could buy, a couple Ether, 10 Solana or, like 1 million Dogecoin.
Yeah.
It wouldn't be 1 million. It'd be, whatever, 100,000 Dogecoin or whatever. And that's actually always been one of the things I've noticed people really like about Ripple, for example, because Ripple's like a $2 token. But sorry, my point though on the Bitcoin dominance though is, like what's interesting about this is like what I'm trying to say is like even though Bitcoin dominance is sort of lower than the peak it was in the 2021 market and the 2017 market, the fact that there's just so many more coins means that like if you were to adjust by the just sheer number of coins, even though the Bitcoin dominance is only 60%, which is, again, lower than the 70% ratio hit in 2021, that's actually in a lot of ways even bigger, just because there's so many assets that people are sort of invested in beyond, essentially that just exists for people to invest in. So, and I would say like the majority of TradFi stocks, like the majority of crypto exposure that you can buy in the traditional markets, to me, again, I haven't run the data, but anecdotally, it seems like much higher than 60% of those companies are directly related to Bitcoin, at least in terms of market cap, right? Like Strategy is a Bitcoin only company, and most of the Bitcoin treasury companies are all, most of the like crypto treasury companies are pretty much all Bitcoin. Besides
so far, MicroStrategy is by far the biggest. Like I think there are 20 companies and listed companies that have more than $100 million of Bitcoin, but the vast majority of that is in one. Though that may change. We had some news that David Bailey, who's the founder of BTC Media and has been a long time Bitcoin bull and investor player in the space, just launched a business, was planning on raising 100 million and raised $700 million in the US market. Right. So 500 million of equity, 200 million of converts. And this convertible note strategy is one that seems to be working really well for these public companies. So I think, just to summarize for people who are listening to this, basically a company gets $100 million. It takes that in a convertible note. It takes that $100 million and it uses that $100 million to pay to buy Bitcoin. At some time in the future, like call it 2 years or 5 years, they have to pay back the principal amount of that convert with interest, or the converts into equity. And so basically, if the price of Bitcoin is higher than it is today, well, they can just, probably what will happen is they will just convert into equity at that higher price. If it's less, then they'll have to sell some Bitcoin in order to, meet to meet the term. So in other words, like while things are going well, it's like a positive feedback loop. Like it's a flywheel, right? What you call like reflexivity, Andrew. Yeah, not what you call it, but you like to talk about that. But on the way down, it might have the same kind of inverse effect, right? Where it's like, well, if converts are below their strike, then you got to sell Bitcoin to, meet that obligation, and that could mean more selling pressure on Bitcoin, right? So right now, the thing is moving up, and I think it's probably going to continue moving up for a while. Not financial advice, but basically, all of these vehicles have an implied premium to NAV. So long as they're issuing stock or issuing converts to buy Bitcoin, they're doing so in a way that is actually technically accretive to investors, meaning the amount of Bitcoin per share does increase, even if the premium itself means that you're effectively paying more than the fair market value for what's inside each share unit. Hopefully this makes sense. And so what that does is, so long as there's a premium, it creates this buying pressure. Is that premium going to change? I don't know. I don't know the answer to that. It's hard to imagine it'll last forever, but lots of things in finance stick around for a very long time. So I think for the time being, you've got this interesting effect where some investors prefer to own shares of ETFs or units of ETFs. They're buying the ETFs. Some, but obviously a shrinking percentage of people want to own the underlying asset directly. Like I think that's clearly on the decline relative to these other vehicles. And then some people want the treasury exposure, either because they're a fixed income investor, they need converts. Converts to give them a way to own an exposure to Bitcoin without being an equity holder. And then the equity holders are looking at it because they think that this premium is going to be defended or is going to increase with time as these things gain more Bitcoin and become bigger. So in other words, there's all these different drivers of Bitcoin accumulation that's happening. And it's far less obvious, to your point, that there are as many drivers or any as big drivers as accumulation in any other asset. I mean, it's not even close, right? So I think that there is chatter of someone should do an Ethereum, MicroStrategy, do that in the US, and there's some potential candidates for that. I won't talk about that right now because it's kind of rumors. But basically, I'm not sure that those kinds of vehicles will gain the same kind of traction as the Bitcoin vehicles, just because Bitcoin is Bitcoin, and it just clearly has captured the zeitgeist. Counter to what a lot of us thought when we thought with time Bitcoin dominance would decrease, just as maybe email dominance decreased relative to like the web or the app store in terms of how much time we spend on the internet. It used to be that most of the time we spent on the internet was spent on email or web browsers. Now that's a much smaller percentage of time. So those old heuristics that we used to use for the web maybe don't always work as well when it comes to an asset class, which has that reflexivity, which, the bigger it gets, the bigger it gets, right? And I think that that's something that maybe it's not always been true for other technologies, which is yet another reason why crypto is so beguiling, so weird and hard to analyze, I think, in a way.
No, and that's a really good point. I think the other, it's hard to know. I think the other thing too, so you started this with a great sort of question of like, why is this kind of like the most quiet bull market we've seen?
Yeah.
And my first point was all about Bitcoin, and I totally agree with you. Your second point about on sort of the treasury companies. I guess that my third point too is that, unlike the previous cycles, there is a competing technology that arguably is way more exciting and way more impactful on society, which is AI.
Interesting.
And so, and on top of that, NVIDIA, I'm actually not sure, but it's roughly matched or maybe actually even beaten Bitcoin's performance over the last 2 years, right? So, so it's not even like crypto is like this like crazy way outperforming, technology subsector. There's an even bigger, technology that's had arguably better performance, and then on top of that, it's clearly going to have more societal impact in the next kind of 3 to 5 years. I mean, I guess that's arguable, but one of the things I've also noticed is a lot of the people in the crypto space who are, I guess sort of two things. One is a lot of the crypto commentators, for the most part, are like, some of them are like, hard money Bitcoin people, very, very interested in sort of the monetary side, economic side. But a lot of them are tech accelerationists, right? So these are people who are they're techno optimists. And a lot of these people are haven't shifted entirely, but have shifted a lot of their, like, I would say, brain cycles towards AI and like thinking through the implications of that. And so I think that's like a really big aspect as well, right? Like, for example, I'm full time in crypto, but I would say I spend quite a bit of time researching, researching the future of AI as not as much as I research crypto, but it's a lot higher percentage than any other technology that I was researching, 5-10 years ago, as like a total percentage. So, and like we're seeing, new stuff come out every day, like the Ilya from OpenAI. I think today it came out that he was like thinking about building a bunker before they release AGI. So there's a lot of like very troubling headlines in the sort of AI world, with like bigger geopolitical sort of and economic implications in the short term. So
yeah,
I think those.
Well, I mean, that's interesting, but if so much mind share is being shifted away from crypto to AI, then why are we in a bull market? Like, why is this happening? I mean, maybe.
Well, we're not in a, sorry, and going back to that previous point, we're not in a broad-based crypto bull market right now, right? Like we are.
Fair enough.
We're pretty much in a Bitcoin-only bull market from what we've seen. Besides, like even Solana, which is like, I think the most hyped about product. Like
it's still like down 40% from its
still down 40% from its all-time high, right? Yeah. And like it had an entire meme coin cycle where its revenue, I think, like 100x in the last 12 months, and it's still 40% below its all-time high. So it seems like a lot of the flows towards Bitcoin are really like, it's almost like we bifurcated the tech acceleration aspect of crypto and the hard money aspect. And the hard money is stronger than ever because, 10-year treasuries are at like 4.5%. The US just got downgraded by Moody's. Like there's a lot of people who are very, very worried about like the new Republican bill, I think has like a, we're going to only lose $4.5 trillion in the next 10 years is like the gap, the revenue loss goal. So I think a lot of people are very worried about the fiscal situation. So the hard money aspect of crypto is at all-time highs. And that's why you see Bitcoin at all-time highs. And then the sort of the tech aspect of crypto is, I would say is still arguably in a 4-year bear market at this point. Like it's really, it has not recovered.
That's another very good insight. So there's a bifurcation. The tech accelerationist is not in a bull market, but the hard money maximalists are like more powerful than ever. Like that narrative is more powerful than ever.
Yeah.
And it's so interesting that crypto exists on these two tracks. I mean, in a way, I see it as well because oftentimes I get asked like, I own gold. Should I own crypto? And it's like, well, if you own gold, you may want to look at Bitcoin because there's some similarities, and I'm bullish on Bitcoin. But when it comes to crypto, you got to remember, like most crypto projects they're more like technology startups, right? That instead of in lieu of equity, as the primary thing that accrues value, it's a token, and sometimes it doesn't accrue any value. But basically, like the tokens themselves are way more speculative than the idea of this being kind of like some kind of hard money or gold substitute. And it's not even really akin to silver and other metals, right? Because those have, a lot of proven utility. It's much more like owning VC or owning like a basket of AI startups. And, like to your point, the valuations that we saw during the last crypto cycle of pre-launch concept projects getting $500 million, $1 billion, we're seeing that happening right now in AI, where anyone who used to work at some reputable firm starts a project and they're getting funded $1 billion or more in value. And so, the flow of capital is constantly looking for growth. It's constantly looking for a new thing. There's obviously like a very mature venture capital market in the US and increasingly around the world. There's sovereign wealth money and everyone wants exposure to the technology. So right now, the technology trend is towards AI in investing. But on the dollar hard money side, it's towards Bitcoin. And what's interesting is that it's not at the expense of gold, I don't think. I mean, you can't prove a counterfactual. Maybe gold would be at $5,000 if it wasn't for Bitcoin. I have no idea. It's at $3,300 right now for listeners, around there. Yeah, $3,279. But both of these things are succeeding at the same time, and I think that they're succeeding because of this other thing that you're mentioning, which is you've got a shift. This is a turning point in history. The world order is changing. You've got debt levels that are skyrocketing in the developed world. Like all those things in the past have been harbingers for instability, and gold has always acted as a good store of value during those periods, right? So
Totally.
that's kind of what's happening, and like they're both happening at the same time. And you mentioned also on the legislation side, like this new tax bill. I actually read, I mean, I saw it on Twitter. I'd like to corroborate it, but all these budget projections project like 3%, 10 sort of terminal yields on treasuries. Basically, it's like, or like 3.2 or something. It's like assuming for the next 30 years that the yield on a 10 year is 3.2%. It's like maybe that's what the yield will be. Right now it's 4.5. So
Yeah.
someone ran the math and they said basically that if you were to run it at 4.5 for the next 30 years, it would add like 40 trillion of interest expense over that period of additional interest expense. It's like, oh my God. Anyway, so
Yeah,
I
I think
used to, I had a brief flirtation with, what's that stuff, modern monetary theory, but I actually think that, debt matters. And like you got to pay it back. Otherwise, you can face ruin. I don't know. Feels like that's certainly the reason why Bitcoin and gold are doing so well. Okay, I want to
sorry, one last
yeah,
point.
one more point, and then let's talk on some other stuff.
Yeah, just like one other thing too is like a lot of those really high flying, technology stocks, technology companies in the 2021 cycle have also just been completely taken to the woodshed, right? Like
The smaller ones, the Mag 7s are back mostly to
for
close to
sure, for
all-time
sure.
highs.
But like besides Mag 7, like right, like
Yeah.
23andMe was a $6 billion market cap and it just got sold for $250 million. Like, and there's so many like that, right? Like Nikola, Nikola turned
Well,
out.
that was a scam, apparently.
No, I know, but I'm saying like there's a ton of companies like that went public with huge valuations. Like look at the Chamath's, SPACs. People like to harp on him all the time. Like most of those are massively, massively underwater. I just think there's like the overall tech space beyond AI has just been has mostly been taken to the woodshed. So we'll see. I mean, I think like if we get another upcycle in sort of global liquidity, then that could change really fast. And yeah, I mean, it's funny because it's like, again, if you were just looking at this from a market history perspective, you would actually, this is kind of happening exactly as expected. Bitcoin outperforms in bear markets and outperforms in typically the first half of the bull market. And then you get like the more technology side of crypto outperforms in sort of the second half. So again, we're sort of shaping up to get there, but for now it's still, I would say we're still in a bear market for the technology side people in crypto.
Well, for the technology to perform at scale, I do think you need regulations that provide clear rules of the road, right? Like, let's just talk about the Genius Act because I think that's kind of relevant.
Yeah.
So the Genius Act is
Right?
the Senate. So we're armchair, congressional analysts here. But the people I've spoken to, basically, the situation is this: there's a bill in the House, there's a bill in the Senate. Both of those things are on concurrent tracks. If they get passed through both chambers, they can be reconciled and passed and signed by the president, or they can get together now and combine them before voting on it as a single bill. So that's basically like what's going on. So in the Senate, there was a vote yesterday on the Senate version of the bill, the Genius Act, that had to go through a procedural vote where they had to get 60 votes, so supermajority, and it ended up clearing that hurdle. Wasn't a blowout, but it got through that period. And so now it goes to, debate, and then there will be an actual vote on the Senate floor. And so like if the procedural vote was a supermajority, getting to 50+1, which is all I think they need to get to here, is something that I think now a lot of people who are plugged into this are kind of pricing in, basically. So there is a summer recess that comes up during, I think, July and August. So the hope, I think, is that this thing will get passed before then. If not, it will be punted until the fall of this year. And again, like the sooner this stuff gets passed, the better, because then, politicians turn their attention to midterms, which even though they're like 18 months away, the US political cycle is so, it starts so early that people are already campaigning. So there's a lot about the Trump administration and Trump that we've been very critical of on the show, but I believe that passing legislation to clear the rules of the road for things like stablecoins, tokenized dollars, is something that will be really useful. It'll help improve transparency and accountability within the industry. It will encourage new entrants. It will allow for more capital formation, and it'll be good for the dollar. And we've talked a lot about that before. And I also think what it will do is it will bring incumbents into this into this space, either kicking and screaming or willingly. You know, we've talked, I think, in the past about CEOs of banks saying that they're really excited about stablecoins. Brian Moynihan from Bank of America said, once the rules are in place, you know, we see ourselves getting into this industry. MasterCard announced a big integration recently where it was integrating on-chain stablecoins on public markets like a Solana, Ethereum, like all across its business. So this is something that's happening. It's good for the industry. It's good for the technology. And what does this matter for the market? Well, it matters for the market insofar as, you know, if stablecoin values, Andrew, go from 300 billion or 275, wherever they are today, to $3 trillion. I mean, those are assets secured on chain that are transacting on these networks where fee revenue is being paid either to stakers on layer ones like Solana or on layer two networks on Ethereum. And all of that stuff is going to increase the utility of those networks and increase the value capture. And, you know, I don't know how to calculate it precisely, but certainly like the more businesses building on chain, the more assets on chain, the better it is for those networks. It doesn't mean every single stupid token is going to go up. And I think that's what's interesting about this market that we're in. But basically, you know, the last few cycles has been number go up and there's been a beta of close to 1 across the board. That I don't believe will happen this time around. I think there's enough value creation that you can identify and separate out that you'll be able to say, okay, this platform is doing well, this one is not. And, you know, I have a particular thesis on that, which maybe we'll get into another episode. But basically, I think that the regulation begets utility, begets value creation, and that might help the market for some of these different assets.
Yeah, and yeah, that's interesting. I mean, I think maybe that's why we're seeing a bidding war right now for Circle, right? Like, I saw Ripple just is sort of rumored to be bidding in the range of like $9 to $11 billion for Circle.
Yeah, really?
Yeah, yeah.
Because what I heard a few weeks ago. I mean, first of all, it's not what I heard. Here's what was publicly disclosed. They filed their S1, right? Which is, you know, they're filing to enter a quiet period ahead of an IPO. And that had all sorts of disclosure about the business. Then after that, and I think the value was like 2.5 or 3 billion or something. And then after that, there was this rumor going around substantiated that Ripple wanted to buy Circle before that for like $4 billion and that they'd spurned that offer, right? And they probably thought, you know, in the public market, they could be worth more, even if the starting point was lower. So are you telling me that there's new rumors out that people thought they were going to sell for 8 to 9 billion? Is that like an update? Like I haven't seen that.
So that's just again, this is just sort of an analyst on Twitter, Paul Barron, saying Ripple and Coinbase are in a bidding war. Ripple sort of at the upper hand is in the $9 to $11 billion. Has the upper hand at a $9 to $11 billion price tag. I mean, again, who knows? These are just kind of the rumors on crypto Twitter. I mean, could obviously be far from reality, but it actually makes a lot of sense that Ripple would want to buy Circle just because
it's a real thing.
Yeah, it's a real thing, and Ripple's entire use case is about, you know, essentially sending like remittances, international transfers. Like they're trying to replace the SWIFT system, right? So having the number 2 stablecoin and, you know, number 1 regulated stablecoin, if you want to call it that, as some people call it to differentiate it from Tether, it would be a huge boon for that. So it would also be pretty funny if Ripple ends up controlling, you know, Circle and to a certain extent has control over the whole crypto ecosystem through that.
What would be really funny is if they were like, this was our plan all along.
Yeah.
When we launched Ripple in 2012 or whatever it was, and it was like, it was all about just getting the XRP valuable enough that we could sell enough of it. So we'd have a giant cash stockpile so that we could buy one of the big real players. And then all of a sudden we're like the de facto payment rail for the whole industry, right? But whatever, it's like fake it till you make it. I mean, I'm not being critical of Ripple. I'm just saying, like, you know, USDC is a real product that trades, like stablecoins together do more dollar volume than the Visa network. Now, most of that's for trading crypto, not for buying and selling real goods and services. But even still, the numbers are like massive, right? So like this is a real thing. And there's a reason there's a stablecoin bill in the Congress, and like all these people know what a stablecoin is because it's like a completely real thing. So that's all I was saying, basically.
Yeah. I mean, I don't know. I've heard some very smart people make some the bull case for Ripple recently, and I'm just not a believer at all. But
oh, I thought you were going to be Ripple pilled.
No, I'm not Ripple pilled at all. But I mean, if they acquire Circle and they're able to have the second largest stablecoin, and they effectively become Tron, but for USDC. So I just for people who don't realize, Tron, which has kind of always been seen as like, I don't want to say joke, but has always been seen sort of negatively by a lot of the people in the sort of the tech side of crypto, just for being, very centralized, having what some people argue is a shady founder in Justin Sun.
Careful.
But
you don't want to get sued.
No, I'm just, that's like the sort of the reputation.
No, I'm just joking.
Yeah, but has like secretly, I don't even want to say secretly, but like quietly built this, one of the most used blockchains in the entire world. I think Tron is now actually has more, by some metrics, is the most actively used network because it's essentially the rails for Tether. So all the exchanges use it. Everyone uses Tron to send Tether, like USDT, around, and Tether is obviously the largest stablecoin. And so they're like, if Ripple buys, Ripple buys Circle, then maybe they sort of transition USDC to be the Tron of USDC, I guess, is sort of
the Tron of USDC.
Yeah,
I like it. Well, listen, man, like we've been at it for 45 minutes. I could keep going. I mean, we didn't even talk about consensus.
Yeah, I mean,
I let it off.
You were on a panel, so why don't we hear about the panel you're on?
Well, I moderated 2 panels, which is something I actually love to do because I like to try and frame a discussion, and I get to recruit my panelists, which is so much fun. So I did one panel about the intersection of crypto and AI, and I had Mike Grantis, who's a VC at Contango, and Trevor Kaverko, who's the co-founder of Sapien, and Douglas Heinzman, who is one of the key people at the BRI, the Blockchain Research Institute, and previously was a top enterprise consultant at IBM for many, many years. And basically the discussion was, A, how do you ensure that the AI age does not propagate all the same kinds of relationships that the Web 2 era had, right? Where, you are providing your data, models are being trained on it, they're reselling you services, you're not paying for the product, you are the product, but this time you may be the product and you're also paying for the product. And, how this is going to create, sort of a wealth capture within certain companies that can be bad for society versus a Web3 model where, storage, compute, governance are all decentralized, where data is sovereign, where applications are native to individuals. So like this idea of identic AI, basically that individuals should control their digital selves, their digital twins. If they have an AI that helps them, it should be something that they have custody over. So, I mean, there's the devil's in the details with all this stuff. That's a lot of words, and implementing that is actually harder than it sounds, but it's some really thought-provoking ideas. The other panel that we did was the Canada panel, which, I'm a total homer, and I love talking about how amazing Canada is. To anyone who will listen. So I had Jean Amiuni, who's the founder and CEO of ShakePay, which is Canada's biggest independent crypto platform now that WonderFi has been purchased by Robinhood. And Lucas Matheson is the country head for Coinbase Canada, and Yelena Jurek, who's the founder of Noble XYZ, which is a great Canadian startup on chain built with Cosmos and over $1 billion in stablecoins and counting. That's a really exciting project and one that's more crypto native. So, what do we talk about? I mean, one of the things was how do Canadians be more vocal about the fact that this industry has created tons of value, lots of high-paying technology jobs, tax revenue, all that stuff. But B, that this is, part of the innovation economy for the future. That if we're going to become the wealthiest country in the world, it can't just be from tapping our vast natural resources. We also have to, mine the reservoir of human capital and talent that we have. And that means supporting entrepreneurs that are building with blockchain, right? So that's sort of a big part of it. And then the other thing was, how do you lobby government more effectively? I mean, one of the comments that someone made was, that stablecoins today are treated as securities, and the OSC, the securities regulator, is the one that sets the rules. And that's nothing against the OSC. It's that in the absence of a federal law or a push from the government at the federal level to create a national innovation strategy and rules of the road around crypto, and stablecoins would be one of many examples, the power kind of devolves to the provinces, and the authority goes to whatever agencies operating. And so in this case, it's the OSC and security. So it was more a comment about what do we need to do to get the federal government, activated, to activate industry, to activate the government to try and make the case. So some really interesting ideas around that as well. But otherwise, just an amazing week, a lot of fun. We hosted an event at the top of the CN Tower, which I haven't been there since I was a kid, but for people from out of town, honestly, it's the coolest thing in the world. You're way up in the sky, you can see the whole city, you can see across the lake. It's a really special experience. And just seeing the buzz and the energy around town, to see Canadian founders get elevated and, get to tell their stories, what they're doing, I thought that was really awesome. How about you? How was the week?
Yeah, it was really cool. Same. I wasn't on any panels, but I went to a lot of side events, a couple private dinners, and shaking hands, kissing babies. My biggest takeaway was, I would say, sort of two things. So one was, and the first point is maybe just my ETH sort of quasi maxi hat showing, but I saw a lot of builders in the space who were very dismissive of building their startup on Solana, and were sort of actively looking to build in the Ethereum ecosystem. I think for a lot of people that were building, real businesses outside of the sort of, we'll call it casino economy, hot ball of crypto economy.
Yeah.
The massive surge in meme coin trading and all that type of stuff. One of the sort of downsides of that was that it actually crowded out some of the projects that were building real businesses on Solana, at least within the Solana community. And so a lot of people, both in the inside and also just from the outside looking in, it actually sort of made it less attractive to a certain extent to build on Solana, just because it was kind of Solana is the meme coin trading, casino chain. I'm building a real business, therefore I'm not going to build on Solana.
Interesting.
Yeah. So that was really interesting. I mean, again, I'm also quite biased as someone who, I own both assets, but own more ETH, and I'm a big fan of ETH. And I think layer twos is the right sort of ecosystem to build in. So a lot of projects building on Base. That was actually the most common chain people talked about.
Yeah.
And a good amount of hype as well for Celestia, just for people who are building their own L2s and stuff. Those were kind of that was kind of the first aspect was, again, sort of the downside to having the hot ball of money come to your chain is that it can sort of put off some of the real builders in the space. The second thing that was interesting was this was the first conference where I really sort of started to understand and see a lot of hype for DePin.
Yeah.
So, I don't know about you, but there was a lot of sort of.
Well, there was hype around DePin almost 2 years ago.
Yes.
And actually in Web3, my book, there's a whole chapter about it. And in Blockchain Revolution, the first book I wrote, we had this whole thing about decentralized physical infrastructure, talking about everything from last mile telephony to power grids. This is something that's been brewing in the crypto world for a decade or more. And, nothing so powerful as an idea whose time has come again, as I say. So tell us, what did you see?
Yeah, no. And that's exactly right. I didn't realize how real this space is kind of rapidly becoming.
Right.
And one of the projects, actually a Canadian team, we should get them on the pod, based in Vancouver. It's called Specic. And yeah, we'll get them on the pod because I was talking to the founders. And they're essentially building a decentralized drone network. So anyone who owns a drone can take aerial satellite, or not satellite images, but aerial photos, and then you can essentially earn rewards.
But it's like Hive Mapper, but for drones.
Yes, exactly. And they were kind of, they were talking about how Helium and Hive Mapper, had built out huge networks, and like kind of, obviously sort of first big success stories in the space, but they are made a very compelling case for sort of aerial imagery being the most, in the short term, most profitable, sort of should see the highest level of demand. And they'll, a lot of the criticism in the DePin space is that, there's the projects Helium, Hive Mapper have done a really good job scaling up the supply side of the network, but we have yet to really see an explosion in demand.
Well, I was just thinking about that because I was like, what's new with Hive Mapper? And I looked it up. When I wrote the book in Web3, I interviewed the founders, and they told me that I think they said like 5% or 10% of sort of coverage of the city, of the cities of the world, or of all the roads in the world. And the whole thinking was, why not just use Google Maps, right? That's a classic thing. It's like, well, a lot of users of Google Maps are not individual, like retail users. They're like institutions, like governments, weather applications, state houses, all the rest of it. So having like open data is probably better than having it all controlled by a single company. But also, the data is better because the idea is that all this information is constantly being acquired by dash cams driving around these cities. And so you'll have like an image from a street from LA last week, whereas the Google Maps image might be from 9 months ago. So if there's construction, or if there's been a fire, or one of these things, or there's a rerouting of the road or whatever, like it's actually way better with data that's constantly continuously being uploaded, and that's being supplied by like individuals using crypto incentives and mass collaborations. Like I always thought that was such an awesome concept. But they've got this thing, bmaps.com, powered by Hive Mapper, which I gather is, to your point about the demand side, right? Which is, okay, how do we, now that we built all these mapping data and incentivize all these people with this token or whatever, how do we get people to use this data? Because like the strong bias is going to be towards Google Maps because that's what everybody knows. So really interesting comment. Makes me want to have Hive Mapper on. Maybe we can do a DePin episode.
Yeah, we had the Hive Mapper CEO on.
We did, yeah.
And I don't know if we've had the Helium, but we'll get the Spexy guys on because I think it's also Canadian. I know you're a big Canadian homer, so good guys. And then also just a quick shout out, another project that I thought really cool. I was talking to the founder. Project called ETH Gas. I believe the founder is Hong Kong, Canadian, Vancouver. But so maybe we can see if we can get them on the thing on the pod as well. But they just went live on mainnet, I believe, and really cool product. Essentially allows you. They essentially tokenize Ethereum block space. So like futures. So you can buy the rights directly from validators. You can buy the rights to like specific block space in the future, like specific for a specific block. So like if you're like the use case that he talked about was like if you're an NFT project and you're going to do a mint, and so there's going to be a huge amount of demand, on the chain that you've launched on, typically Ethereum or Solana. You really want to make sure that there's not too much congestion on the network when you do so for that specific time period. So you could essentially buy futures on ETH Gas and effectively, I guess, control the supply for that specific time period. So obviously a lot of people can also speculate on it, which I think is really cool too. So a lot of really cool projects in sort of the Canadian crypto space. Seems like a lot of them on the West Coast. So we'll get the founders on the pod in the summer, and should be good.
Well, listen, Andrew, that was a great discussion. Covered a lot of ground. What's going on in the markets? What's new on the regulatory front in the U.S., Canada, consensus, DePin. What's going on? It may be the silent rally, but we're going to keep yapping here on DeFi Decoded as long as we can. So that's it for this week. We'll see everybody next time. Make sure to like, share, comment on the episode wherever you get it. Helps other people find it. Helps us with our page rankings. Till next time, have a good one. Take care. Bye.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized. or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.